Good afternoon, everybody. How's it hanging? Where's the disclosure? Alright, I'm associate member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I got out of... Oh, does it still say SMCI? I got out of HIMS and SMCI. I could have sworn I deleted that. On Friday, with a down move, lightened up on a lot of those other shorts, put on some Palantir options to hedge a short that I have in Palantir, which glad I did that, for the moment at least. Let's see what happens. Yeah, update today in the market, I guess starting with HIMS and Palantir earnings, two of the more important reports. I still think the most important event of the week, honestly, is going to be AMD's earnings, which I think is tomorrow after the close. But Palantir absolutely crushed this earnings report. It's a phenomenal report. The measured move in this thing was like $18.50, so up to like 169, I guess. Yeah, up to like 169 for Palantir. So we're kind of holding that area, I guess, as... No, that's $9. Sorry, 179. So 179. So not trading anywhere near the measured move, at least for the moment, on the Palantir report, despite the... Yeah, okay, 178. Yeah, I was just doing rough math there, but I forgot to add the $10 in, you know? 178. So 178 on the upside, roughly. Not anywhere close to that, but the earnings report was phenomenal. It's just a matter of what was priced in. This report almost looks more in line to me with like the Microsoft Meta reports that were the best reports of the entire earnings season so far. Maybe not quite as much of a beat as Microsoft and Meta, but it's a phenomenal report. But the stock, I think, is obscene at these prices and this valuation. So it's struggling to continue a little bit, even on a phenomenal report, which is not too surprising. You can only imagine what the stock would be doing if it reported in line. But for the moment, we'll keep an eye on this one. Palantir trading up about $6-7 right now on a really good earnings report and not even close to the measured move. So we'll see what happens with that one. HIMS, on the other hand, that report seemed to be, depending on which number you look at, in line to a miss. They missed on their subscriber number. The other things seemed kind of more or less in line to me on a quick eyeballing of it, and they are taking that stock down because we know in this earnings season you cannot be reporting inline numbers or misses and expect to survive. That's just been how it's been. So Palantir, so HIMS trading down, also not trading its measured move. Trading about half of that for the moment, but we'll keep an eye on both of those, and we can turn things over to the index level here for the market. So great win for the bulls, great day for the bulls. Big up day, up 1.6%, probably the biggest up day we've had in quite some time for the market. Granted, we've gotten a little jump again in some volatility after the breakdown that we had on Thursday and Friday, so not overly surprising as ranges expand to see a bigger up move. But SPY's up 1.6%. That actually probably means that they saw a little bit of vol control selling during the day today, but obviously nothing too dramatic. Couldn't overwhelm the buy flows in it. So SPY's up 1.6%. Q's up a solid 2% and trading higher here after hours, probably with the help of Palantir. The IWM is up 2.25% on the day today. So really big update for the market. TLT's green small. The dollar is flat, but still holding above the 27.50 level for the EUP ETF that we've been looking at. Bitcoin's up 1.4% on the day. I'm surprised it's not up more. Really seemed like a risk-on day today, where they would have bought Bitcoin up further, but they did not. let's go over to the charts and try to assess what this up day means. So first of all, it was actually a very boring trading session when you look at this 5-minute chart. All of the action came in the first like 30 minutes of the day. That action was basically straight up. We had a gap and go to the upside, straight up. And then the market was very tired and boring. A little bit of a grind higher, primarily sideways action for almost the entirety of the day. Some of the stocks I'm involved in had just completely flatlined. So again, just really, really boring there. So that's a SPY 5-minute. But turn it over to the daily chart. So this is what's more interesting and more important, right? We had a little bit of a breakdown Thursday into Friday. It's actually our first down move basically since April. We had like a one down day almost in June. We had this like little pullback in May that was very, very quickly brought back up. This is like the first, I think, more real down move that we've had basically since April. And it's just a 2-day down move, right? Thursday, they gapped us up because of Meta and Microsoft, but they sold us down all day. And then Friday, after the jobs number, we actually got some degree of downside continuation for the market and VIX continuation to the upside. At lows on Friday, we had hit the point of extreme extension in the SPYs and the Qs. SPYs got down to like 619 with the ADMA at 630 and change. So we actually had like $11 of downside extension in the SPYs on Friday. Qs were basically similar. Qs got to like $11 of downside extension from that ADMA. So it made sense to see the market get bought back. And what we all wanted, and unfortunately most of the time you don't get that ideal setup from the market that makes things a layup, but what we all wanted was a nice juicy gap down this morning. A gap down this morning would have been super, super viable in my opinion. Gap down to like 6,200 in the SPX, which is the support level, or even a little bit below 6,200, where then you could buy it back up through. Would have just been a layup to cover any remaining shorts and start to buy in some at least shorter term longs. But alas, the market oftentimes does not give us the easy money that we always desire. They gapped us up pretty big this morning, which I felt in the morning meeting today put us in a really tricky spot and left me feeling like I didn't have a ton of conviction. The gap up this morning, I really felt, and this is why I like to trade stocks, by the way, and I don't just like to trade indexes. I could go on that rant again. I know I have a couple times recently about people that only trade index futures and why I think it's so limiting, because sometimes, like on a morning this morning, I just don't feel like I have a strong advantage at the S&P level. So at the S&P this morning for the SPYs, we had a pretty juicy gap up this morning, but I really could have seen us continuing in either direction from where we opened. It would have made sense to me to trade closer to the ADMA on the daily chart, which is basically eventually what happened, meaning we gap up this morning, and I didn't necessarily expect us to rip off the open, but we gap up this morning, and then we end up trading higher to the ADMA on the daily, or possibly to a gap fill between Thursday and Friday before finding some potential resistance. Or if the market wanted to be really weak, people that didn't have the opportunity to get out on Friday could have used that gap up to be able to sell the market down. But from a risk-reward perspective, just immediately off the open, I just didn't feel like I had a good risk-reward setup. I didn't feel like I had strong conviction. I kind of wanted to I definitely didn't want to buy the gap up. I was more interested in shorting it, but just not at the prices that we opened at. I wanted to see us get more to, again, that ADMA or that gap fill area, which eventually is what happened, but we never got any sort of a pullback from that point. I know I called out like a short here at about 130. Actually, then I thought I nailed it. I thought we were actually going to get a roll down here, but then we put in a little bit of pivot low and held in, and actually closed on highs. But the market never really gave us too much of a 5-minute setup beyond that little short that I called out that worked a little bit before it failed, despite getting into that daily zone where I would expect some resistance to occur. So here's the big question with this bounce back. Basically, is this a little bit of a dead cat bounce that's going to lead to a lower high and then more sideways choppy action, or even a lower high that breaks the low from Friday that leads to a lower low and a trend reversal? Or was Friday it? Was that the dip, the 2-day pullback? Your dip buyers are coming right back in after that, and we're making our way back to all-time highs. First thing I would say is that I don't think that the down move, like we talk about how markets work in feedback cycles, and that's such an important thing. The market move higher here from late April through the present day has been heavily marked, in my opinion, by feedback cycles where one set of buyers is continuously exchanging their baton to the next set of buyers. It was at some points corporate buybacks, and it was CTAs, and then it was vol control coming with the huge bid, and throughout the entirety of all of it, it was retail. And if you were really paying attention to the market dynamic data that we look at, you could literally see within the data like the passing of one set of buyers to the next set of buyers over the course of pretty much the entirety of this up move. So one question to ask yourself is, was this 2-day move lower enough to change the market again structurally to put us back into a feedback cycle of selling? And I would argue no. When you look at like where our most recent CTA trigger is that we have seen from Goldman, or look at some of that vol control numbers where the selling would potentially come in, I don't think that the Thursday, Friday move is enough. You really would need to have even more continuation lower to begin to trigger things. We'll probably get a CTA short-term trigger update tomorrow, but last I saw, if I remember, the short-term trigger was still all the way down at 611. So still a ways away from even where we were on Friday's low. And then, from the realized vol perspective, it was certainly nice on Friday, and honestly again today, to add into some data sets something that's more than 0.5% up or down. But it's still just 1 day or 2 days here. I don't think it's enough. I don't think it's dramatic enough to change the buying to selling. It probably at least halted the buying for a little bit, but not enough to really change that buying into selling that's significant. We actually probably did see some selling from vol control with the degree of the up move that we had today. But I don't think it's quite significant enough to really change this market structurally. And there's a good chance that after like a few days of volatility here, that our ranges immediately go back to tightening again, just with the constant flow of index level option sellers that we are constantly seeing with all those income products that JP Morgan and everybody else has issued at this point, which will probably tamper down the market again unless we can continue with the momentum that we saw Thursday, Friday, which I think basically would mean that we immediately start trading our way lower tomorrow or Wednesday, which I'm not confident that that's going to happen. So I am looking for this market to find some degree of resistance. I kind of think that the highest probability right now is chop, but I could be wrong, and we could just make a pivot low there that immediately gets us back to new highs if AI leads us. And that's the real question. Is AI just going to lead us immediately back or not? Tale of two markets, AI, semiconductors, that is really the root cause of this bull market that we're in. And I remember pre-market doing the morning meeting today and looking at AMD, even before obviously today's trading session, it was pre-market, and saying AMD looks fantastic. If AMD holds Friday's high, this thing looks fantastic now for continuation. We had a little bit of a parabolic move. We shorted that parabolic move. We got a move into the equilibrium zone, created a doji down there, and then pre-market this morning, this morning it was already showing relative strength and looking fantastic for continuation. And I saw that, and I was like, man, if they start running AMD and NVIDIA again, that's all you need. It's all you need. If they start running AMD and NVIDIA again, it's all you need. And SPYs will be right back above 640. So we'll see. And that's why I keep saying AMD's earnings report, which I think is tomorrow after the close, I think is the most significant event of the week. Because every other semiconductor that's reported this earnings season so far is kind of fallen flat on its face. And a lot of them have rallied big into it, so it makes sense. But even if you start with Micron, which was technically the end of last earnings season at the end of June, huge rally into it, really good report, sold it off. That's been highs. It's been dead money ever since. ARM, not good. AMAT, not good. ASML, not good. So those are the numbers. Those are the names we've seen so far. This morning we had ON on semiconductor. I don't really know anything about their business except for the fact that they have semiconductor in the name, to be totally honest. But there's another one, ON, not good. Stock's down 16% on the day. But AMD and NVIDIA, I think, are very different than those companies. AMD and NVIDIA are really the AI trade, and the other semiconductor names in a lot of ways have just gotten to ride the coattails of AMD and NVIDIA and work its way higher. So again, this market, the bull aspect of this market is the AI trade. It's what seems like it led us up again today, right? So the NASDAQ finished up 2%, but AMD is up 3.5%, and NVIDIA, and they're up a little bit after hours, probably off of Palantir, but NVIDIA is up 3.8%. It was NVIDIA, it was AMD that really helped the Qs and therefore the SPYs to be as strong as they were on today's bounce back. So it's all about this AMD earnings. I think AMD earnings are going to cinch whether or not 640 is like a genuine high that gets held for a period of time, potentially all of August and September as we work through week seasonality, or do AMD and NVIDIA do the opposite of what all the other semiconductors have done so far? Really, AMD and NVIDIA is pretty deep in the earnings season. Does AMD do the opposite of what all the other semiconductors have done so far and crush its report because they are the AI trade, in which case, you know, we're right back into the bull market. So we'll see what happens tomorrow after the close. I think tomorrow during the day we have like a decently important economic number, but I forget what it was, an ISM number. I'll research that in the morning. The economic calendar this week I think is pretty light, so it really is all about earnings, and we are through most of the most important Mag 7 stocks at this point. But you know, AMD is a really, really important company. I'm not sure when AVGO is, but I know that they're usually really late in the earnings season as well. So that's pretty much all that I've got. I had a pretty crappy day today. I got run over in this JOBY. Kind of just is what it is. Really loved the idea of shorting this today off of the fact that they're buying another company out, which has been so consistent in terms of bringing stocks down. I think it was HIMS when they bought someone out. That might have been, I think that was this day, actually. I could be wrong, but I think that was this day, June 3rd. They announced that they were buying someone out, had this huge initial up move, and then they closed it on lows. There's another example, I don't remember the name, of a similar company that's like a meme type, you know, high valuation company doing a buyout that they gapped it up and they sold it all the way down. And then JOBY just flew in the face of that. Usually, even in normal circumstances, the company doing the acquiring sells down. But with these crazy meme stocks, like I remember being impressed in the morning meeting. I think it was this day. I called HIMS out as a short that day because they were buying another company out, but it was gapping up huge because of the meme aspect of the stock. And I was saying, guys, I think that this is something that actually gets sold, and we can short this because usually that's what happens. The acquirer gets sold, and it was a great trade down on that. And JOBY, the flip side was that the technicals just looked super, super bullish above 1850, and it just had a massive breakout to the upside on that. So really, really strong day. And technically, it's a day one for this JOBY as well. Blows my mind that it could be trading at whatever it is now, $20 billion valuation, and basically have no revenue at this point, and they don't even have much cash on hand, and they're spending it to buy a company out that also loses money. But, you know, a lot of things don't matter when it comes to valuation in this market environment or anything like that. It just seems a bit silly. So that was definitely a focus for me, and I lost money on it. It was my worst name on the day. Outside of that, it was really, like I said, I did not have conviction at the index level today. I took it pretty easy, managed my swings. I did add back to some of my short swings of some of what I covered on Friday into the down move, but was trying pretty hard to not do anything too dramatic. But yeah, I mean, that's pretty much where we're at. That's all I got, and I am happy to turn it over to you guys for any questions that you may have, of which I'm not really seeing any here immediately in the VTF. Such a boring Monday trading session today was. Over in the YouTube from Scott, Tom Lee is calling for new all-time highs in August. Tom Lee calls for new all-time highs in every, you know, you got to take that with a little bit of a grain of salt. I respect perma bulls so much more than I respect perma bears, but you got to understand, you know, who you're dealing with when you're looking at call outs, because there are some people out there that have never made a bullish call in their entire career. There's some people out there that have never made a bearish call in their entire career. I don't think that Tom Lee has basically ever made a bearish call in his entire career, which again, I respect that. He sticks with it, but he calls for a new all-time high every month. So we'll see what happens over the course of this month. Bill giving me the CTA flows early. You love to see it. Over the next 1 week, $3 billion of buyers into the U.S. in a flat tape. Just below that, 2.7 in an up tape. That's a very quiet number compared to what we've gotten used to. So this is what I've been expecting. Like, the systematics are not the tailwind that they were. Doesn't mean that, you know, it's bearish. If anything, they are still buying in a flat tape, $3 billion worth of buying. But it's not. I remember us looking at some of these data sets in May and June between CTAs and vol control, and we were like, it's scheduled to be $10 billion of buying every single day. And it was just insane. So, you know, now if it's $3 billion over the course of the week, the market has the capacity to overwhelm those flows to the downside if they have a reason to. But they have to have a reason to. And then in a down tape, you could see $11.5 billion worth of selling from CTAs. But again, you need the down tape to actually occur. So, and then over the next 1 month, $13 billion to buy. It's relatively small in a flat tape versus $76 billion to sell in a down tape. So we've hit a point here, I think, where the risk on the systematics is becoming to the downside, but you need to trigger them. And the problem is that the trigger levels are still fairly far away. This SPX one is grinding up. So SPX short-term trigger is now 61.89. 61.89. Where does that get us to? 61.89 is basically the low of July 2nd. Wow. Wow, so we actually almost got there on Friday. Almost. The low of July 2nd. Let's look at what that is on the SPY. The low of July 2nd is like 616.60. Call it 617. So, as of Friday, we actually were getting somewhat close to hitting that first CTA sell trigger. If you could do that, things would get very interesting, because that's when you can go more into that feedback cycle of selling. Where we are right now, obviously we had this huge bounce back, so we're now, you know, really far away from it again. What did I just say? 617? Yeah, 617 basically. So you need $15 the downside from where we are currently to get us down there. I don't know what's going to get us down there, but notable that it's working its way higher. So again, it seems like from a positioning perspective, the risk to this market now is to the downside. But note when I say that the risk is to the downside does not mean that we have to go down. It just means that if we can go down, then you can trigger more additional selling. It at a certain point could feed on each other if you can break this market structurally. Bill giving us a note from vol control. Would only turn modest seller if equities in the daily SPX change was maintained at 1% area for the next week or two. Otherwise, a resumption of 50 basis point change type days in coming weeks is still a buy. Okay, so yeah, so very in line with what I was just saying earlier on my expectation on vol control, which is basically like, great that we got, 2 trading sessions of higher realized volatility between Friday and today, but I don't think it's enough. If we immediately go back into tons of option selling at the SPX level, that then brings this market right back down to what we had seen every day in most of July until the last day of July, which is never having a day of more than 50 basis points up or down, then you're actually going to resume a bid. So, taking this stuff together, we're at SPY 632. The CTA short-term trigger is basically at SPY 617. If we're going to get to SPY 617, honestly, if we get there anytime soon, it probably is happening in conjunction with higher realized volatility, would be my guess. Because now at this point, you need a big move to get down to that 617. So if you could get down to 617, you might be able to get the double whammy of the CTA selling beginning to hit in conjunction with the vol control beginning to hit. But where we are right now at 632, it almost seems like we need a whole nother catalyst in order to be able to get there. Like, I'm still looking for some resistance to come into this market to potentially have us go more sideways or maybe even grind a little bit lower. But to really trigger an additional sell-off beyond what we saw Thursday, Friday, you probably need an event. Maybe AMD reports terrible earnings. I doubt it, but maybe they do, and that's the event. Maybe it's, we are August 4th here, something related to the trade war or Jerome Powell or something like that. I really don't know. I'm just throwing things out there. But you probably need an event to get us to 617. And then you got realized vol increasing most likely in conjunction with the CTA sell trigger hitting, and then all of a sudden maybe this could become something. Maybe if you really lose like 6,200 in the S&P, you could actually get a revisit of 6,000 of SPY 600. I think that's possible, but possible is one thing. The trigger is something else. So we'll see. From Varun, what's a good level to consider Amazon as a buy candidate? I don't want to touch in a market that I'm concerning is getting weaker. I don't want to be buying the weakest ones. If you want to buy candidate, I think you should be looking at Microsoft, and I think you should be looking at Meta. Buy strength if you think that the market can move higher. And unfortunately, we talked about buying both of these names on Friday for today, but they didn't give us the opportunity. We needed the gap down this morning. If we could have got a gap down this morning, Meta and Microsoft, I think, would have been top of the buy list on a gap down this morning. But we didn't. We got an annoying gap up that was very tricky to be able to manage because it felt chasey to buy, but too early to short. So it was a pretty tricky open. But I think that those are the names that you want to be buying, not Amazon, not the weak ones. From Cyril, what do you think of the Russell? Let's have a look. Yeah, I mean, big bounce back day for the IWM as well. Similar but different to the other indexes. We got to see where resistance comes in. We got to see if we get a lower high that comes in. And I would be looking at this area, broadly speaking, where it is right now. This 220 area, maybe it could overshoot it as much as like even 222. But into this 220 to 222 area in the IWM, this is where I would be looking to short and then let it prove to me that it's wrong by getting us back up. And then above 625, if we can hold above 625, you'd be full out bullish. But this is one of the things that we noted in the distribution pattern of the market was the consistent selling above 625. Multiple failures there. From Cyril, since it's grinding up the CTA sell level, then you need more time to go sideways. Yeah, so if we can go sideways, that's kind of a little bit of where my head's at when I'm saying I'm more expecting like sideways chop, because you have some weaker seasonality here in the beginning of August, so maybe that helps to offset things. While the systematics are not headwinds right now, they're not the tailwinds that they once were. So I think that I think that the only thing that thwarts my idea of sideways chop is the AI trade. Again, AMD and NVIDIA, continuation on AMD earnings. That's the thing that gets us back above 640. But otherwise, I think that some degree of chop makes sense. If you get continued chop, then that CTA sell trigger will continue to slowly rise. And then that makes it obviously even easier to trigger. But you still need a reason to actually go down to trigger those levels. So we'll see. So it's like, on the one hand, if you could get an event that occurs again, similar to what we saw on Thursday, Friday, that gets us below 617, you could get a really nasty August. But I think that a little bit higher of a probability situation is that, especially the first half of August, is more choppier price action that leads to that CTA trigger moving higher, and then leads to more real weakness as you get into later August and or September. That's kind of been my more general thought process. So we'll see. So in other words, if I want to really break this down into like three, like every day we were in this grind higher, and the highest probability was a grind higher. Now I kind of foresee three potential outcomes. Potential outcome number one is Friday's low is the pivot low and we're making new highs. That happens because of AI. Option number two is choppier action, more sideways action. We find some resistance. We don't immediately get back above 640. We maybe stay in between the high of Thursday and the low of Friday for the entirety of this calendar week. That CTA trigger works its way a little bit higher, and eventually we can roll down and weaken out in late August to September. That's option number two. In my brain, that's actually the highest probability option. Option number three is we get a more immediate trigger. We get a lower high in the market. We get a more immediate event of some sort that gets us below Friday's low. Below Friday's low, we're basically hitting the CTA sell trigger. The vol control people begin to sell a little bit as well, and you go into a more serious sell-off back down at SPY 600 or SPX 6000. So in my head, those are our three kind of potential outcomes. Obviously, there's a million more, but that's what I think are the higher probability situations. So we'll see. From Sherry, does Microsoft have a bearish technical setup? I don't think so. I think Microsoft looks bullish as hell. Pivot low on Friday, probably only went down as much as it did because of the market. It's back above Friday's high. Microsoft is not a momentum stock in the same way that some of the other Mag 7 companies are. It tends to be more of a grinder. We saw that very perfectly over the course of the last quarter, where it just grinded up over the course of May, June, and July. My biggest expectation is that Microsoft goes back into its upside grind, barring any major market move that could derail that. I would only even consider becoming not bullish, I didn't say bearish, not bullish on Microsoft below 510. So that's what I'm thinking on it. From Robert, which index do you follow for the EU? Oh, you're asking Cyril. Cool. I like it. Chat amongst yourselves. Make more comments. Do it up. Bill K saying, for what it's worth, September cut is now priced in at 96%. 96% probability of a cut in September. That makes sense to me after that jobs number that just hit. Unless you start seeing a real uptick in inflation, which, how many more inflation numbers do we have before the September Fed conference? 2? So I would agree. I think that September is a lock unless we see a big uptick in inflation. In inflation. So we will see. There's a chance that the Fed would have even have cut in July had they, had the jobs numbers unrevised. But I actually still think that they would have held steady, personally. So they want to see the inflation number, and Jerome Powell's been very adamant that basically the inflation side of the mandate is more important to him than the employment side, because you can't have steady employment without having steady prices. So yeah, and the jobs number 2, it's like we talked about this on Friday. we're at an environment right now, I think, when it comes to economic growth, like employment numbers, where like a little bit bad is good, but really bad is bad. So on Friday, I remember saying we saw like 73,000 come in, and I was saying like I think that's actually like almost a Goldilocks number, because it's going to massively increase the probability of a Fed cut in September, but it's not so bad that the sky is falling and the economy is completely falling apart. But the revisions on top of just what the July number was made it more into the camp that it was bad enough that it was actually bad. And that's why we saw the sound that we saw. All right, folks, if there's nothing else, I got to catch a train back to New York City. So I'll end the meeting there. Oh, wait, hold on. From Varun. You know how you buy stuff and sit on them in your 401k. Why would Amazon not be a good investment to accumulate slowly? I mean, Varun, I would say that about every Mag 7 stock all the time. I would say, you know, there's never a bad time on in my opinion, on a 401k that's for retirement that you're not going to be using for a decade plus, to always be accumulating and dollar cost averaging into the greatest companies of all time and into the S&P as well. But from a pure trading perspective, that's not the one that I want to buy right now. All right, have a great night, everybody. See you tomorrow.